Hey guys, TommyBryson here, and I learned this rule a few years ago by accident. And this rule is called the 90-10 rule. And the entire idea is it's a rule when it comes to investing and the types of investments you actually want to make and how to do it. It's a rule to make sure that when things get very optimistic, let's just say that you don't have way too much money into something to the point where if things don't go your way, you can become homeless or lose everything you actually have. You never want to be in a compromised situation as an investor. You always want to have all the odds in your favor. So today, I'll tell you everything about the 90-10 rule, how I use it, how you can use it, and also how to go out there and also use it when it comes to investing. Now, if you guys are new here, guys, I post videos every single day, so make sure to also subscribe, hit the bell so you're notified, and on top of that, also destroying the like button. Now, the very first thing is this, guys, okay? When it comes to the 90-10 rule, it's all about investing, right? So there are only really two types of ways to invest, okay? The first type is basically what exactly is an investing and what exactly is investing on an investment basis. Well, the idea is very simple. The whole goal, as a simple man or woman would say, is, hey, I want to put money into something, make sure the odds are in my favor of making me more money at a good, reasonable return according to how much risk I'm actually taking. That's really the whole idea when it comes to investing. I put money in and I want to get money back. Now, investments these days may sound like, hey, it's just a stock market, right? But no, in reality, you also have rental properties, real estate, right? If you put money into real estate, you understand it fully and you buy a property the correct way for the right price, you rent it out, you get some cash flow. The answer is, well, that cash flow, that investment is actually paying you money. That's an investment. When it comes to the stock market, if you're investing into index funds, you actually understand them, you're going on for the long run, you have a well-balanced portfolio, that's also an investment, right? If you want to pick stocks like Warren Buffett or Charlie Munger, the answer is you can do it if you want to. But again, as an investor, investing basis mean, hey, I'm investing, but the odds have to be in my favor of winning. It can't be, hey, I think this is going to do this. No, it has to be, I know, and here's why I know. By the way, you don't have to be fully accurate when it comes to investing into stocks and so on, but the answer is you got to know what you're doing. You got to know what accounting is. You got to know what a balance sheet is, a cash flow statement, an income statement. You got to know how leases work. You got to know what a 10K form, a 10Q form. You got to know how companies try to hide things from you to make a company look very attractive, although it isn't. If you know all that stuff, then that is also investing, because basically, whenever you invest money, the odds are going to be in your favor. And lastly, my favorite investments are usually businesses, right? Although a business might be very risky, usually you are going to get the highest return on your money by starting a business. But again, if you don't know anything about the business, about marketing, about product production, about management, about building a culture, you don't know a single dime about any of these topics, you start it up, that's not an investment, because again, you want to put the odds in your favor. Now, the best way to do this is basically, hey, if I want to start a bar, for example, but I would never start a bar, by the way. I just don't like that scene, unless it's like a nice bar with like burgers and wings and it's just like normal stuff there. I like those stuff. But overall, if I want to start a bar and I don't know anything about bars, the answer is, why don't I, as a person that knows nothing, work for a bar for the next 1 or 2, 3 years and learn everything? That way, when I do start my own bar, I already know the whole business. That way, it's actually an investment. That way, I put the odds in my favor. That way, you're not that statistic of saying, hey, 1 in 7 businesses fail every single minute or whatever it is. You don't want to be a failure. What you want to do is be a success. And the only way to do that is to actually know what you're actually doing. That's the whole idea. So overall, investing on an investment basis is all about making sure the odds are in your favor, knowing that you know exactly what you're doing, and making sure your money is going to get back a reasonable return. Those are the 3 main fundamentals. However, what is basically buying something hoping that it will make you money? Is that an investment? The answer is no. That's speculation. And that's a big part of the 90-10 rule. But overall, speculation is basically saying, hey, I'm gonna buy this asset or this token or this currency or this NFT or this Bitcoin, and I'm going to hope that this asset goes up in value and I actually make money and I sell for more money, right? Say for example, hey, you know what? I'm gonna buy this piece of art, okay? And it sold for last time for 90K, and I'm hoping this time it sells for 110K. The answer is that's also not an investment, because basically you're speculating on something you can't control and don't know anything about. A big one is basically, hey, I'm gambling. I'm in a casino and I'm thinking I'm investing money, but in reality, you're not, right? Because all the odds are in the favor of the casino. So in reality, the casino is the actual investor in this business, because basically the odds are in their favor of making more money statistically when it comes to probabilities, right? So the whole idea is speculation is making the assumption that something is going to make you money because you believe it will, because the crowd is telling you so, or because you just think it is, okay? And that is not putting the odds in your favor. And that's where speculation comes into play. However, human nature is not just going to say, hey, just ignore everything. Everything's going to be fine. No. There will be opportunities out there that you might want to get into, but you know it's speculation and you know nothing about. Whether it's in real estate, I want to invest in real estate, but I know nothing about it. Speculation. I want to invest in stocks, but I know nothing about it. Oh, that's also speculation. I want to invest into this or that or that. The answer is if you don't know what you're doing, you're also speculating. But when it comes to the 90-10 rule, how does this entire thing kind of fall into place here? Well, the idea is you're going to be investing 100% of your money, right? But you want to split it in a way into investing and also into speculation, because I know for a fact a lot of people out there, they want to participate into Bitcoin or NFT or maybe into real estate, whatever they want to do that they don't really understand, but they just want to play and be a part of it, right? They want to have that chance of saying, hey, if I put money in here, I might become the next Jeff Bezos or whatever it is, right? The odds are very slim, obviously, but you want to basically do it, okay? It's like the same thing with like the lottery tickets and all that stuff, right? So how do you make sure that in the end, you're not homeless and broke and don't have any money, but in the end, you're still basically okay, taken care of, you have a great nest egg, great investments, but you also speculative, so on and so on, okay? How do you do that? The answer is 90-10 rule. You're going to be investing 100% of your money, but you want to take 90% of it and put it into investing, right? Investing, meaning I want to invest 90% of my money into things that are in my favor, that are going to give me a reasonable return that I fully understand. You don't invest in something you don't understand, again, because that's speculation and that's not invested. Whether that's into real estate, stock market, index funds, mutual funds, whatever it is out there, or business. I love businesses, by the way, right? You want to make sure when you invest into this stuff, you're actually putting in 90% of your money into things that are actually going to make you money. Usually, for the average person, that's going to be index funds. And by the way, if you wanted to, you could split it up, right? So I have 90% here, but I want to take 45%, put it into real estate, 45% put it into basically, let me grab this money and put it into like the stock market or whatever, into index funds. You can do it if you want to, but again, that money is just for investing, right? A reasonable return. You understand it, and the odds are in your favor. That's what you want from this. But the other 10% is going to serve to basically kind of like give you a taste of what you want, to let you participate in all that fun. You know, if you want to go out there and buy some Bitcoin or invest into something you know nothing about, or maybe buy some Pokemon cards you think you're going to be collectible in like 10 years or 20 years, you can if you want to, but just make sure you're not going to go broke doing it. You know what? I'll share a story with you guys, okay? There was this guy that I know personally, and actually helped him out a few times, and he actually participated into something that was called Telefree. And the whole idea between Telefree was a big scam, by the way, a big scam. And the idea was that you put money into it, and all you had to do was post basically twice a day, and that would give you passive income. Obviously, it sounds like a big buffoonery, okay? But when you have a lot of people doing it at the same time and growing massively, people want to participate. So he did that. He put all the money in that. When things blew up, he lost all the money. That's not what I want for you. I want you to go out there and say, hey, 90% of my money is being invested correctly, but that 10% is being used for speculation. If I lose it, great, I lost it, but I'm not homeless, I'm not broke. That's not what I want for you. And again, even another story, right? You had like the tulip crisis back in the 17 or the 1800s, where people kind of lost their mind and said, hey, tulips, flowers, are worth more than real assets like gold, actual currency, and also, for example, houses and places, right? The idea is tulips, flowers, created basically a whole market of it, and the price got so high where people wanted to sell their houses, their assets, just to buy into the tulip market and basically hope to God that they actually made a reasonable return on their money. Turns out a lot of people went broke and lost a lot of their money. Is that what I want for you? The answer is no. So overall, the 90-10 rule is a great way to make sure that although you want to participate in these things, that you don't go broke in any way, any shape or form. That's the idea. For me, there are two rules that I want to follow here, okay? Two rules when it comes to 90-10 rule. The first rule is basically, you always want to keep investing that 90% into your normal investments to guarantee you a good amount of money in the future. That's going to be your retirement account. That's going to be the things that are going to take care of you. Second rule is basically, although those speculations sometimes are going to make you a lot of money, the answer is you don't want to add extra money. Why? Because you never know when the bubble is about to pop. And it might just be when you're about to put all your money into it. So follow the rules strictly. Only invest at 10% and don't invest more money into it, no matter how much money you're making. Keep investing the correct way also. And lastly, you want to make sure you're investing into your future, into real, liquid, applicable investments. That way, that money is going to make you money in the future. Compound interest. Do not miss out on that, okay? And guys, overall, that is it for this video. Simple, quick video on the 90-10 rule to make sure that if you want to participate in the GameStop stuff, in the Tesla stuff, in the Bitcoin stuff, in the NFT market stuff, in the whatever it is out there, because there will be a new thing, trust me. I just want to make sure that you guys are safe and taken care of, okay? But guys, that is about it for this video. Comment down below if you have any questions or any stories that I want to hear. Comment down below, let me know. I'll see you guys next time. Thanks for watching. And as always, if you like this video here, guys, well, like this video on top of that. Also, subscribe and hit the bell to get notified. And if you guys want to talk to me one-on-one, uno, just DM me on Instagram or join me on Patreon and call me directly or text me directly. I'll see you guys next time. If you guys want to watch another video, okay, here's a video right here. And click my face right now. I'll see you guys tomorrow. Thanks for watching, and as always, peace. Speculate, but invest the bulk of your money.